Hello traders and welcome to Explain the Charts. Today, July 6, 2025, we're breaking down USDJPY, looking at both the latest news and the charts. Recent Google searches indicate that the yen is seeing increased safe haven demand, with USDJPY slumping towards 144.30, with focus on the US tariff deadline. Let's dig into what's happening. The latest news suggests investors are wary of the July 9th deadline for U.S. reciprocal tariffs, driving demand towards safe haven assets like the yen. This is further compounded by uncertainty among economists regarding the impact of these tariffs on global economic growth. Simultaneously, the U.S. dollar faces selling pressure due to tariff-related concerns. The positive NFP report wasn't enough to sustain the USD. This is according to ForexLive, as softer wage growth curbed further interest rate repricing. The Bank of Japan kept rates unchanged and reduced its bond tapering plan as expected at its last meeting. It's clear the market will react to both economic factors and policy decisions, but what does the chart say? Looking at the daily chart, we can see a lot of volatility over the past year. Since around October 2024, we saw a pretty significant uptrend all the way to around April 2025, peaking around 161.50. However, since then it's been almost all downtrend, a clear shift from bullish sentiment that reigned supreme for several months. We recently broke the 150 barrier, and it looks like we may be heading for 140. Let's zoom in and consider the last couple of months from May 15, 2025, 1715731200000 to now July 6th, 1720310400000. We can see that we're approaching some support levels from around February 2025. If this breaks, we could be headed for the 140 levels from September 2024. We also see resistance around the 148 levels, which the price has been unable to cross recently. As traders, we need to be aware of these levels. Looking at the 1-hour chart, the picture is more granular. Let's examine the past few days. We need to look for signs of reversals or continuations of the current trend. I'm seeing a lot of choppiness and indecision. Remember, today is July 6th, a Sunday, so volume is low, and the prices are pretty flat. We will want to avoid trading today, since there may not be enough liquidity in the market for our trades. Alright, so what should we look for moving forward? First, monitor the news surrounding the U.S. tariff deadline. Any progress in US-Japan trade negotiations could put selling pressure on the yen. Also, closely watch the price action around the 140 and 148 levels. A break below the 140 support could signal a further decline, while a sustained move above 148 may indicate a potential bullish reversal. As explain the charts, we don't make biased predictions. But in summary, here are some important price levels and what to look for. 148 is resistance, 140 is support. For a bullish scenario, look for a break and sustained hold above 148 and confirmation of a successful resolution of the US-Japan trade negotiations. For a bearish scenario, a convincing break below 140 with increased volume and a failure of US-Japan trade talks should confirm further downside.